Let me guess. You've heard this before, or maybe you've said it yourself. Why should I put my money in an investment that gives me 15 to 20% a year when I can triple my money in 3 months? If that's your relax, you're not wrong. In fact, you're very correct. But here's the question nobody asks. What happens when that tripling opportunity disappears? Or worse, when you need cash urgently? Don't blink. This might change how you see money forever. Some business people say, investing in stocks, bonds, or treasury bills is for people who don't know what to do with their money. That statement reminds me of something. It's like a blind man trying to describe an elephant by touching only the tail. He's not lying. He's just not seeing the full picture. Let's state the obvious. If you have a legitimate business idea, and I repeat, legitimate, that can triple your money, please, by all means, go ahead, run that business. Because investing is not a Ponzi scheme, a get-rich-quick plan. Drop money today, buy a G-Wagon tomorrow. No, investing is about structure, patience, and strategy. Here's where many business people miss it. Wealth is not just about making money. Wealth is about keeping money and having available when life happens. This is where diversification comes in. Because, let's be honest, those double my money in 3 months deals, they don't show up every month. Sometimes they show up once, then disappear like Nepa light. And remember the golden rule. High risk equals high reward and high stress. You're the one doing the heavy lifting. No sleep, too much thinking, fasting and prayer, emergency meetings at 2 a.m. But with investments, your money does the heavy lifting while you sleep peacefully. Now let me break this down very simply. If you're smart, and I believe you are, you don't put all your eggs in one basket. Here's how wise people spread their money. 1. Real estate. Real estate can give high returns. No argument there. But it is not liquid, meaning if an emergency happens tomorrow, your money is still inside the building, relaxing. Unless you're okay with selling at a huge loss, real estate should not be your emergency fund. 2. Bonds. Bonds are like the responsible adult in the room. They give steady returns, less risk, and you can access your money within a short time. Perfect for people who want returns without heart attacks every morning. Free treasury bills, T-bills. T-bills are the no-stress investment. You put in your money. Government says, relax, I got you. You get fixed returns. Your money back in a few days if needed. Perfect for money you'll need in the next 6 to 12 months. No drama. No surprises. For money market funds, this one is like a glorified savings account. Better interest than normal savings. But the rate moves up and down like weather. The good part? You can access your money within 12 to 24 hours. Great for emergency funds, short-term savings, peace of mind. Here's the truth nobody tells you. Business builds wealth. Investing protects wealth. Smart people don't argue between the two. They use both. So the next time someone says, investing is for people who don't know what to do with money, just smile, because now you know better. If this video changed how you see money, even a little, hit the like button. Subscribe for more real-life money wisdom. And share this with that one friend who thinks investing is boring. See you in the next one, where your money starts working harder than you do.